Welcome to BAM It with John Michael and Mari, covering all things business, accounting, management, marketing, and IT, the place where businesses and entrepreneurs find the forest through the trees.
Hello and welcome to BAM It. This is Mari Peterson with Marketing Outpost and, of course, my sidekick.
John Michael. I'm your sidekick now, Mari?
Yeah, you're my sidekick.
Okay.
Of Peridot Consulting. And today's episode, we're going to be covering budgeting. So don't let that scare you. Don't turn it off. This is actually going to be very helpful for you and your business.
Yeah, I'm excited about this topic because we get to host in our studio today Camille Stimach. Camille's a partner at Peridot Consulting. She joined our firm this past year. She's been a fantastic addition to our firm. I'm very excited about it. And she came in as our budgeting specialist. And I'm going to let Camille kind of explain what is a budgeting specialist. Camille, first of all, welcome.
Yes, thanks for having me today. A budgeting specialist, whenever I talk about budgeting, sometimes people start thinking I'm sounding like Charlie Brown's teacher. But the thing is, it's such a critical thing. And what budgets, it's an action. And essentially what I do is I reroute people's income so they're using their income more efficiently. And that's kind of like what budgeting is making income effective.
So when we talk budgeting, we're obviously not talking about not-for-profits and
right.
We're talking about actual, tangible living life so that you're paying your bills and you're not wasting your money.
Right.
And putting your money where it needs to go first. So a common client of yours is probably somebody that makes okay to good money,
right.
but they never know where their money's going and they never
Correct.
have cash in the bank.
Correct.
So what is a typical client situation?
So I might have a client that comes to me and says, I've got about $20,000 worth of credit card debt. I'm having trouble, getting this debt paid down. I don't have any savings. I don't have any retirement, but yet they'll be making decent money. So a lot of the times it's a question of organizing their dollars. And my whole thing is I'm very much about pre-allocating all your income, because when you don't pre-allocate your income, it's too easy to lose track of your dollars. It's too easy to, where did that money go? So it's all about pre-allocating.
So you said something before we started this episode about budgeting is not QuickBooks. Why don't you describe that? Because sometimes it's easier to say what budgeting isn't than what it is.
Well, and you bring up a good point because I work with businesses as well as individuals. And a lot of the times when I've worked with business clients, they say, oh, well, I do QuickBooks. And that's great. QuickBooks, it's a necessity, I think, when you have your own business. It runs your reports. It's helpful, I'm guessing, for CPAs as well to have these reports off of QuickBooks. But it's not a budget. It downloads your activity. It gives you a P&L, it gives you your balance sheet, your cash flow, and that's fantastic. It's necessary. But it's not, the budgeting comes before the QuickBooks. And it's used separately. Budget is kind of where you have a guide. You have a blueprint, I guess is a better word for it. You've got a blueprint for the year. So once you kind of figure out where your dollars need to be, that's just going to be more. Not that it's more useful, it's just different than QuickBooks. You need a budget and you need QuickBooks.
Yeah.
So
they shouldn't be confused.
QuickBooks to me, or my checking account statement, is a historical record of what I've done.
Correct.
And a budget seems to be something more of a pre-planning tool.
Absolutely.
Okay.
That's perfectly put. It's a pre-planning tool. That's a very good way to put it. Very good way to put it.
Yeah. QuickBooks is a great glorified checking account. It's a great historical reference. It's a great conduit to the tax return because you
Absolutely.
need that balance sheet and the income statement. But we're talking about even before we get to that because you need to have money to buy things, to
right.
spend on things. And if
right.
you're wasting it on the needless necessities, you might not realize you're doing that until it's too late.
Well, what happens with business owners as well is they kind of treat it differently than their personal accounts. And this is what people need to remember. If I'm self-employed, what I earn feeds into my personal accounts. The money I make is what I need to live off of personally, to pay my bills, to pay my mortgage, or to buy groceries. So to have a business budget in place is really going to allow you, I can't say more money because I don't know what everyone makes each month in their business, but it's going to organize those dollars. So when you go to pay your personal bills, you already know what's coming over there from your business. So like, for example, if I do a business budget, I need to say, okay, these are my overhead costs, but where am I spending money on this business that isn't a fixed cost? So I hear this all the time with business owners. Oh, it's a write-off. I'll just, let's go out and eat. I'll write it off. That's great. Yes. But if you're going to eat all the time and your business is only pulling in $2,000 a month, you really have no business eating out all the time, whether it's a write-off or not. I mean,
yeah, just because you get the deduction, you're still out of pocket for that cash.
Exactly.
And a lot of times that deduction, if it's $100 deduction, it's only saving you $20 in tax, give or take, and you're still out of pocket the other $80.
Absolutely. And that is the biggest misconception I think business owners have. Oh, it's a write-off.
Well, it's a justification in many ways.
In some ways, yes, absolutely it is. I've seen people do it like, oh, I'll just put this on the business card.
I'll get, it's kind of like it's an indirect credit card
right.
to them.
It's a credit card.
It really is. It's like, oh, I got money in the business account and I really want to,
right.
treat the family out for dinner tonight. So it's a whatever. We'll figure it out. It's a business expense. I'll figure,
And
I don't want to get into the realm of what's legally a business expense or not. But a lot of people live that life. Or they might say, well, I need to get this something and it's a business expense.
Oh, absolutely. And go ahead, Mari, because
Well, you have established what a budget is. It's a pre-planning tool.
Mm-hmm.
But in my conversations with you before, you used a term I had not heard before, and I want you to explain it because this is the kind of budgeting you do. And
right.
you called it zero-based?
Zero-based budgeting.
Okay. Tell us a little bit about that.
Okay. So, and I'm just going to use very vague numbers just to keep the math simple. So let's say, and this works for... it's easier probably to explain on the personal side. The same concept really applies for business. But so if I make $5,000 a month, okay, I know that all of my bills, my fixed costs, my mortgage, my utility, my car insurance, we all know what our fixed costs are, bills that must be paid. So let's just say my bills every month are $2,500. Okay. Now, I also know that I want to go ahead and I want to put some money aside into savings. So I'm going to go ahead and I'm going to put $500 into savings. I am now left with $2,000. So that $2,000, I've got gas, I've got groceries. If I want to eat out, if there's shopping, if I want to save for home remodel, if I want to save for vacation, those are all my variables. So what happens is if I made $5,000 for the month and I dump everything into my checking account, what happens with humans is, this is where my psychology background, it starts creeping out. The human brain says, oh, I've got $5,000. Fantastic. You do, but if you don't put your $2,500 to bills, your $500 to savings, and kind of designate where the remaining $2,000 goes, really, you have a chance to lose dollars. So what I mean by that is if you've got this big chunk of money in your checking account, if you say, oh, well, I'll go buy this sweater for $50. I mean, I've got,
I'm going to book that beach house.
Right.
Why not?
Because look at my balance.
Yeah.
I've got such a good balance. Oh, I'll pay my bills. But the thing is, at the end of the month, you're like, God, where did all that go? I mean, I didn't even save up for the remodeling we want to do. I didn't save for our vacation. So when you pre-allocate your dollars, everything has a spot that it goes to. And when you do that, honestly, if you follow that system, you will save. You will not accrue debt. I mean, now granted, let me correct that. Sometimes life happens, things come up. But that's the whole point. Okay, let me allocate my dollars to savings. It's pre-allocating those dollars so you can't lose it.
So when you say pre-allocating, does that also mean going ahead and setting up separate actual accounts that money is actually transferred to?
It depends on the individual. All of my clients, I will tell you this, they have a checking account that's strictly for bills. That's it. No gas, no groceries, no shopping. It is bills only. Fixed costs. That's it. They also have a savings account. That's for savings, and then things like annual expenses. And that can come up in businesses too. Like, you have some businesses that may have to pay licensure fees, continuing education fees. So businesses also have annual expenses. So they've got their checking account for bills. They have a savings account that's for savings, and then, also annual expenses. I like to save for that monthly. And then they have what I call their flex account. So my clients always have a separate checking account, and that's where their variable dollars are put into. So that way your bills are paid, your savings is taken care of, and then you just have to worry about, where these other dollars.
So to illustrate a process, say you get $5,000.
Right.
And your fixed costs are $2,500.
Right.
So you'll get that $5,000, you'll go ahead and put $2,500 into this
bills account.
Bills
checking.
account.
Right.
So then you're left with $2,500, and then you want to save $500. You put $500 into your savings
Right.
account, and you're left over with this $2,000, and that in this illustration can go into the flex.
Correct. Now, some people might say, you know what, hey, we want to save it for vacation. What some people do, and again, this depends on the individual. It's, back in the day, we had what was called the envelope system before computers. So everyone, groceries, I'll put $500 in my groceries envelope. Some people use accounts that way. Now, it depends. Certain banks have high fees. People who belong to credit unions, of course, don't have those. So, like, I had one client, he wanted to put money away for home remodel and vacation. He opened up 2 separate savings accounts, and he used them as like a parking account. He would park the money in there each month, and then when he needed it, it would have already been saved up.
I think that's a very good idea, because I have a friend of mine that said they lost their card or whatever, and they were forced to use cash for the week. And at the end of the week, he couldn't believe how much money he had spent on just lunch alone, eating out for lunch. And so having to spend the cash, he was more aware of what he was doing versus just swiping a card.
Right.
So I would imagine that if you actually moved your money into separate accounts, then whenever you're looking at your balance, you don't see 5,000
Right.
and having to do this math in your head. You're seeing, oh, this is actually what I have to spend. So I would think that would be a very useful way of achieving your budget.
It is, but some people are like, oh my God, I don't want all these accounts. It's not really like you have all these accounts. Your checking account with bills, you're just paying bills out of it. This is not some daily, I'm going to use this all the time, I got to keep track of it. No, you pay your bills out of it.
You can set up your direct drafts out of there or whatever.
Absolutely.
Well, in today's technology, you can transfer money, lickety-split
it's
on a mobile
drop
phone.
and drag, or drag and drop. Sorry. Okay, I need to move 500 to savings. That's not a lot of work to move 500 savings. And then, and that's the biggest thing with businesses and individuals is I don't know where the money's gone. So when you've got money that's strictly for bills and strictly for savings, you already know, great, my bills are being met and my savings taken care of. I don't have to worry about that. But you know what? This is what I have left. And so that's the only account you really have to track. And
that's the one you can, you can go out and eat on. You can do that vacation on. If you want to do that vacation budget, you take from that and you take $300 out of that.
Exactly. And the money's already there. So, because what's nice with the annual expenses is think about all the things we don't think about. Taxes for vehicles, birthdays, holidays, special occasions, car repairs, maybe a tire blows out. And what happens is when we don't say, and this is separate from savings. Now keep in mind, I tell people put money into savings, but then money for annual expenses. So, if someone said, okay, if I add up my gifts and my car repairs, I don't know, let's say I need $3,000 for the year in annual cost, just so I have the money on hand. Okay, let's divide that by 12, and that's what we're going to put away each month in annual expenses. Yeah. So that way you don't, I'm going to have to put on a credit card or.
Wouldn't it be nice too if your car does need new tires that you had the money?
It is, and a lot of people say, we don't have the money to do that. And that's where the budget comes in. I'm telling you, with all the people I've worked with, because what I do is I analyze people's bank statements. And so I look for spending habits, spending behaviors. And you brought this up earlier, Mari, with the eating out, where people spend the most money is groceries. We have a lot of people have a lot of Whole Foods habits. It's a problem. There needs to be a 12-step group for Whole Foods. But what happens is, groceries is probably the biggest place people.
It literally eats up your budget.
Oh my gosh. Eating out, yeah, it can, but groceries is the biggest. The biggest.
Do you mean like it's not necessities? It's just
like, for example, you can have a family of 3, 2 adults and a child, spending $1,800-$1,900 a month on groceries.
And some people, they could be like, well, it's groceries. I have to spend that. That's groceries. There's no option there.
And this is the psychology. This is the human behavior. I love it. So what happens with the brain is basically if we eat out, we say, God, we've eaten out a lot. We should probably not eat out as much. We shouldn't be spending money eating out. But the minute you hit a grocery store, oh, well, we've got to eat. We have to eat. It's a necessity in life. We've got to do it. Yes, but you don't have to go broke at the grocery store. For some the brain somehow treats eating out and groceries very differently. And yes, it's different in the sense you bring your food home and you make it. You don't have to make tips. You don't pay tips or anything. But for some reason, like there's no limit at the grocery store with some people.
Maybe there's no filter.
None. It's just kind of like, well, we have to eat, so Well, and people then end up throwing away food.
Yeah.
That's the biggest where people lose the most money.
Throw half of it.
Is groceries.
They either end up throwing half of it away, or they end up, getting the gourmet peanuts or something.
Right. Never go hungry to the grocery store.
Or, the hand-picked, oranges or,
But this can happen in businesses too, and not with grocery shopping, but the same things can happen is like, okay, I make $5,000 a month for my business. I'm going to take my employees out for pizza every other day, or, you know what I'm saying.
I'm going to go to this convention in Las Vegas.
Right. Because, it's work.
Yeah.
It's work, so I'm going to do it.
I can write it off and get a free vacation.
Right.
Nope, not
so
a
what
free
happens
vacation.
is you have to apply the same rules with the business. Okay, I know what my fixed costs are for my business. I've got my overhead. Okay, I know what I need to come out of pocket annually. Okay, where am am I buying a lot of stuff for the office? Am I taking people out a lot? How can I pay myself more but still take care of my employees and still run? And it's same principles apply.
Same psychology, yeah.
Yeah, exactly. So once you really have a solid budget for the business, you can transfer that money. Now people say, well, Camille, I don't know what I'm going to make each month. I can't predict. I don't have a regular salary or a regular pay amount each month. And 1 month I might make 5, 1 month I might make 10. You can still put a budget in place.
Put a budget in place and maybe go by percentage. If you know that give or take, 20% of your income is overhead, you can just start taking 20% and putting it, for example.
Right.
So you can kind of look at your last year's numbers, and that's where historical information helps you out greatly.
Yep, I was just going to say that. Yep, that's where it helps you out.
So you've talked about, I think we've established what a budget is. It's a pre-planning tool.
Right.
I like your process, a zero-based system, that when you either go ahead and move the money or you at least have it allocated in some way. And then you started talking about the common budgeting mistakes that people make, and one of them is groceries. And then another one, I guess, in a business is not really understanding what their budget is to begin with.
Yep.
I think something common, and I don't know if you see this a lot, but monthly fees for me. I'm self-employed.
Yeah.
And I will sign up so fast for a program. And I'll say, I need this program because I'm going to use it in my marketing business. And it is $15 a month. But then another program is $65 a month. And another program is $50 a month. So a little while ago, I started analyzing, going back through and reviewing all my monthly just fees that at the time didn't sound like a whole lot. But then when I looked at them all, it was like $300 worth of monthly fees. And then when I looked at what I was using, I was like, I haven't used that program in like 3 months. Why am I still using that?
Yeah.
So I think that is somewhere I see personally in my own business where I've seen my cash just eaten up with these monthly fees. Even if it's like, oh, I want a digital subscription to Wall Street Journal. Oh, that's only $10 a month. And so I think these little fees sometimes as a business owner can add up quite a bit.
And it's just, from my perspective, just being exactly conscious of that. And sometimes businesses do have higher volume of cash.
Sure.
Or higher volume of income.
Right.
So you might not notice those little things or forget about them, to Maury's point. And it just...
Well, that's where the budgeting comes in, as far as like, okay, how much am I going to spend once you know your fixed costs?
Sorry. I dropped my
John
phone,
Michael's
guys.
dropping everything. Once you know your fixed costs, like, okay, I've got to pay this in rent, I've got to pay this in electric, Wi-Fi, blah, blah, blah. Once you know what's fixed, and obviously, you want to put money aside for taxes if they're not, you've got to take care of the things that are must. But then after that, okay, how much do I want to spend on marketing versus how much I want to spend on, continuing education? You've got to figure out a budget for these things. You can't just be signing up for everything. Now, if you make a ton of money and money's never an issue in the world, then great, sign up for whatever you want if it's unlimited cash. But you've got to have and you being in marketing, I'm sure, you know this, you've got to have a marketing budget. You've got to have some people have mentors in their jobs. How much am I going to spend on a coach? How am I going to spend on marketing? How much am I going to spend on web design? Or I guess, would that be marketing? Web? Yeah. So, it's trying to figure out what are the things that are important to me in my business and that are going to help my business, and then coming up with a dollar amount for those. But like you said, oh, it's only $15 a month. And sometimes you have people like what you said, they forget they signed up for it and they're still getting it automatically withdrawn. And the thing with small amounts, and this happens in the personal world too, as well as the business, again, the brain. Oh, that's only $2.57. Oh, that was only a $3 coffee. Oh, that was like $1.65. They all add up. It's just my mother, God love her. She's famous for, Camille, that was only $4.28. Do you know how many $4.28 there are each month? You can't do that all the time. Yeah. So there's a lot of...
And if you take that to the macro level with business, it might be $4,000 to them. They're like, it's not much, but still it's $4,000 adds up.
Well, actually, if you turned around and said, what if you were getting that $4.28 every month from 100 people? You would be very, very happy.
Right.
Right?
Right.
And so for you, it may not be much, but if you were receiving that, you would think of it differently.
Well, and that's the importance of pre-allocating dollars, because again, the brain, it sees these amounts like, look how much I made this month. It's like, oh God. But yeah, the thing is, and I think people have a hard time seeing long-term, still, I think, humans can very much want to live in the now and, seize the moment. And, I want to enjoy life. That's great. I'm not against enjoying life, but at the same time, we have to be responsible, as well. And we do have to look at the bigger picture. We do have to plan. You'd be amazed how many people I come across, especially business owners, no retirement and no savings. None.
Well, I think part of that too, especially from a business side, is I get this question a lot. How much should I be budgeting? And I think in business owners especially, what I see is they don't understand what the benchmark is. Right. So how much should my overhead be? If my overhead is over 50%, is that good? Is that bad? Am I out of line? If my payroll is more than, 80%, is that good, bad? And I think for business owners, they need to understand for their industry what their benchmark should be on their core functions and expenses. So I know, if you're a law firm, it's very typical that payroll is going to be 70% of your cost. Right. So that's the
What's
question.
your industry? Yeah. Right.
And I think a lot of people have no idea. So they spend, and really they may be overspending.
Oh, a lot of businesses are overspending. Because I do hear that from some of my clients. Like, you know what? I'm making money. I'm doing good. But I don't know where my money's going. And because they'll look at like QuickBooks reports and say, well, I don't know. I don't know where it went though. I have no idea where I spent it last month.
So walk us through your process when you sit down with a small business owner.
Okay.
What is your kind of process?
Well, for example, first I talk to them on the phone. If someone says, okay, well, I need your help. What are you looking for? Do we need to fix credit? Do we have a lot of debt? Or, do we have no savings and we're trying to save? What are you specifically looking to do, because sometimes there's things going on before we put the budget in place. And then once that happens, they'll tell me about their business, and then I will ask for statements. I will ask for, and a lot of times if I have self-employed people, I'm doing their personal as well because they're struggling in both, So they'll send me statements for business and personal. We look through that. And there'll be a lot of questions too, like, what is this for? Is this monthly? Is it annual? So I have to get a good idea of the costs. But then what happens is the two of us, or, whoever's in charge of that for the business, we put it like a proposed budget together with all the, every line item, what's fixed. Okay. What else do we need? What's going into this budget? And then we have to figure out, how does this feed into personal as well? So, but the biggest thing is, to your point, when you're talking about knowing your industry, if someone calls me and needs help budgeting, I don't know about everyone's individual industries. So, they need to help me out with that a bit too, as far as, tell me a bit about, this, like, tell me how it runs, so I can get somewhat an idea. Because I don't know what someone's payroll is going to be for that industry. They've got to have a good handle on. They got to do some homework, I think, before people open businesses.
That would be the analysis part, where somebody takes a budget, if they had established budget, or looked at that and said, "Okay, let's do some analysis on this," and say maybe you're spending, maybe your benchmark is too high. You're using the wrong kind of vendor for that. You're getting taken advantage of.
Well, and that's where business owners they've got to do some homework. And for lack of a better, I guess people can become complacent, especially established businesses. They can become complacent. They don't take the time to say, am I making as much as I can? Am I saving as much as I can? Am I paying people what I should be paying them? Analysis is the perfect word. They're just not. I think all businesses, maybe not always quarterly, but twice a year, need to sit down and say, let's look through the numbers. Let's revisit this. Do I have everything?
It's amazing how little that is done.
Oh,
just a lot of people just live their life by what they have in their checking account.
Yeah.
And a lot of clients I see, we'll get them in QuickBooks or something, but they never look at their balance sheet. They never look at their profit and loss. Mm-hmm. They just think of it as something I asked them to do because I want to do their tax return.
Well, when people think about budgeting, like, oh, I've tried budgets, they don't work. Because this is what people think a budget is. You write down what your expenses are and what you make. That's not a budget. That's writing down a list of numbers. That's just writing a list. A budget is literally saying, okay, here is my plan, and this is how I execute it every month, and doing it. And it's really pretty simple. You're dealing with like 3 accounts. One, you're getting your bills paid. The other, you're saving. And then you only got to worry about one account. You got to worry about your miscellaneous dollars.
But like you said, it's the psychology of it. I have a feeling some of that has to do with actually somebody taking responsibility and then deciding to actually make changes in their life.
Well, that's the biggest thing, is because you can also have people can get out of debt, rack it right back up. So money is behavior. That's all this is. And a lot of it really goes back to childhood. How were you raised around people that were good with money? Were you raised around people that were bad with money? What rubbed off on you? What did you want to do different than your parents did? And some of it's our personality. Some of our dominant traits kind of, glob on to how we deal with money.
Well, we never really talked about your background. So we did not pick a random stranger to come talk to us about budgeting.
Right.
We did establish that she's a budget specialist, but your background was in banking, correct? Tell us a little bit about that.
I've been in finance for like 30 years. So, I've done mortgages, I've done banking, I've done investments, I've done nonprofit, budget and finance. I've done it all. I've taught financial literacy to kids.
Now she's in an accounting firm.
Oh, right. I am not an accountant. I know nothing about. It's really, this is what I enjoy doing the most, is because the years I was in banking, I don't like seeing people struggle and stress. Number one cause of divorce, money.
Right.
vacillates with adultery. But, for the most part, money is, it's just such an emotionally charged topic. And I think I've shared with you all before, there's a lot of shame and guilt around money, a lot of embarrassment, or, people trying to keep up with the Joneses. And really, for some reason, we seem to think that we should be money experts and know what to do. My father was a CFO. He was a CFO of AARP. So, I already had someone who had a lot of good financial sense in some ways. And I just always enjoyed, it's kind of what I fell into. I started bookkeeping at 15. I haven't bookkeeped in years, but, it's a lot of it. If I'm someone who's never been raised around how to use money, or why would I think that I'd be an expert on it? I don't, I got to hire a plumber if I don't. It's not like I should know how to do plumbing. I don't,
I heard a statistic the other day that said that most Americans don't even have $400 in savings.
No, yeah, they don't.
So when I was in corporate, we had a finance department, and that finance department, of course, ran reports every month, every quarter, profit and loss statements and partner statements and so forth. So I would say if you took that down to a microcosm for yourself, that's pretty much, a good way of looking at it. If a corporation, that's how corporations stay healthy, because they have a responsibility to pay employees and pay their overhead and so forth. Now, you talked about common mistakes. So one of the common mistakes that I want you to touch on is the idea that I'm making this money, I'm paying my bills, and I have enough money in savings. I still don't need a budget. What would you say to that?
Well, if you're already separating dollars, like you mean as far as like, I've already paid my bills and I'm saving.
And I've got a little bit of money in the savings account. I'm not really worried. Do you think that person needs a budget?
That process.
They kind of are. There are 4 rules that I believe people should live by. Okay. And I will use an old coworker of mine as an example. God, I love her. So I am not a slave to fashion. Literally, I hate shopping. And so it's not my thing. An old coworker of mine, oh my gosh. She was the most fashionable person in the world. Okay. So she'd always make fun of me. Like one time I actually tried to combine pantyhose and like black socks thinking it would make like brown. It's terrible. Anyway, so I digress. But the point is, one of my friends, my coworkers, she would buy very expensive, like handbags and clothing. And I remember someone else had said something once, like, oh my God, I can only imagine the debt. Now, knowing her and also knowing her finances, her and her husband both had 401ks they contributed to. So they were actively contributing to retirement. They had no debt. Now, when I say no debt, they had a mortgage, and I think one of them had a car loan. That's not bad debt. No credit card debt. Okay? No bad debt. So they contribute to retirement, and they have no bad debt. Bills paid on time every month. No issues there. They got their bills paid. And they had a bunch of cash in savings. Good Lord, they had more than necessary in savings. If those 4 things are met, if you want to go buy a $500 t-shirt, I wouldn't, but if you wanted to, go for it. You're doing all the 4 things you're supposed to. You got your cash reserve. You're contributing to retirement. Your bills are paid on time, and you have no bad debt. You're doing it. That's, so if you've got those 4 things covered. Now, if you've got no retirement, no savings, you've got some credit card debt, you have no business eating out 20 times a month. I can't tell you what to do, but, that's not a good idea. It's not a good plan.
So you just segued into something that I would like you to address, which I love those 4 basic components. Yeah. So what you're just getting into is how to sustain a budget and have financial success. What sort of tips would you give for that?
Well, one of the things that, first off, when I'm dealing with couples or if you've got business partners, everyone needs to be involved in the process. Like a lot of times I'll see a married couple sometimes. One person's doing it, the other person's not. There's resentment building. Everyone needs to be on board. So if I'm in a business with some other partners, everyone's got to be on board with this process. Everyone's got to know what's going on with this budget. Secondly, the way that I lay budgets out, It's all in front of you. I'm old school. I live in Excel. I love Excel. But you've got all 12 months in front of you. It's a very fluid, it's a living document, essentially. So what happens is each month you've got to go into, this spreadsheet, if you will. You've got to update everything. It's not like, okay, here's my bank statement. Okay, I've got $50 left in checking. All right. I mean,
you don't set it and forget it.
Exactly. You've got to go in each month and say, okay, what was this? That's paid, that's paid, that's paid. Okay, I've transferred my money over. Okay, I've got to transfer this money. It's an action. You've got to do it. So what's nice is, some of my clients, they will call me, or I'll talk to them twice a month for about 6 months and say, we'll pull up their bank accounts. We're on the phone. Okay, this is what I have in checking, Camille. Okay, this is what I have. What do I move where? So some people like me to call like every 2 weeks. So we do it together.
Yeah. Some people, I can imagine they need the handheld.
Yeah.
They want, so when you come in, you help people set up this spreadsheet. You help them. Well, first of all, you get the lay of the land. You help them set up the process, the spreadsheet, figure out their bills, figure out where to put the money, and get them a path forward to accomplish their goal. If it's debt, if it's savings, if it's all of the above. And that's, to me, guys, that's a priceless service.
And some people are very organized. They might just, some people are actually, I've had people call great credit, no debt, good money. And they're like, I just feel like I'm not organized financially. And that's what we do. We just organize. Okay, perfect. Now I got something I can follow. Okay, thanks. So it depends on the individual. It's a very personality-based type of thing. So,
tell me about credit cards and how that plays in.
Well, John Michael, you apply, and if you get it, you go. You go use it.
It depends on.
I've got a credit card, and I'm not afraid to use
Camille,
it.
But no.
It depends on the individual. Good Lord, I've met 18-year-olds who are like, I want to establish credit. It's rare that a teenager understands it, but few do. But credit cards, if they're used properly, they can be a great tool. But at the same time, you have people no, credit cards are evil. They're bad. And some of that's with upbringing.
And then you get the other person that's a credit card's free money.
Right. Well, yeah.
It's like, I got a 5,000 limit. I really want that TV.
There's a couple rules with credit cards. One thing that's a big no-no. When you go to stores, like, if you apply for a card with us, say you'll get 20% off. Don't do that. The credit bureaus hate that. If people rack up all these junk cards, I call them junk cards. Now, let's say you go to Dillard's all the time. Great. Have a Dillard's card if it's going to get you benefits, but just don't start opening cards because you get 20% off that day. That's not good. Credit cards, you want to make sure, especially businesses, if I'm using a business credit card, and of course I'm talking about using these responsibly. If I'm using a business credit card, am I getting rewards on this? What's my rate? Am I paying an annual fee? People have to do more homework into the credit cards they're using. Because sometimes when we've had a card for a long time, we want to keep that card, but maybe we can upgrade it to get more current benefits. People need to do their homework on credit cards. Now, some people say, I don't trust myself with a credit card. People like that, generally what I tell them is, depending on how vehemently, against cards they are, cut your card up. Keep your 16 digits, know your expiration date. Call up Verizon and say, you know what, here's my credit card number. Just pay my phone bill each month. Don't carry a card on your person. If there's that much fear around it, then don't do that.
But why set up Verizon? Just to establish?
No, it could be anything. Just to establish credit. A lot of people are trying to build credit. That's one good way to do it if you don't trust yourself with a card, is pay one bill a month. That's it.
I bet you see that a lot with divorces.
Divorce can wreak havoc on people's credit. Absolutely wreak havoc. And it doesn't have to. Unfortunately, sometimes you get personalities coming in like, well, I'm going to charge up that, so some of that isn't so much the divorce as much as how the people are behaving with the cards. But it can really, divorce, unfortunately, people forget to make payments where, it can be really, but it can be repaired easily too. It's not as hard to fix credit as people think.
So Yeah, so credit cards have benefits and costs to them, and obviously it's about the responsibility.
Right.
But what would you consider the most important thing as a business owner when it comes to budgeting?
Well, I think if I'm self-employed, there's a reason I've become self-employed. Okay, I don't want to work in the 9 to 5. But as most business owners know, when you are self-employed, you're working way more than the 9 to 5. So what I tell a lot of my business clients is, I want you to sit down and think about what's most important to me. Okay, I'm self-employed for a reason. Do I want to spend time with my family? Do I want to, in the beginning, I think you have to put a lot of hours in, but, you have to really know what's important to you in life, and you may think, well, what does that have to do with budgeting? If I'm budgeting responsibly and I'm making sure I'm saving, and I'm staying out of debt by using this budget, that's only going to enhance the quality of your life on your personal side. Because money's the main stressor. So if I'm being responsible and I'm allocating my dollars, all that's going to do for me in the long run is, I'm going to save more. I'm more likely to stay out of debt because I'm following something, which in turn, good, I can spend more time with my family. Good, we can go on a vacation, or, I can go get a massage, or, you still have to think about what are your priorities?
Yeah.
What's most important to you in life,
Yeah.
and then kind of do your dollars around that.
So let's wrap up with something personal on that note.
Yes.
How about, Camille, you share with us why you became self-employed yourself?
I did the 9 to 5 for a lot of years, and I had some jobs that I really enjoyed. And plus growing up, everything's, you have to have health insurance. You gotta do this. And I was afraid for a lot of years to become self-employed. But at the same time, the older I get, life's short. I don't want to be miserable either. And what I enjoyed doing the most was helping people build credit, stay out of debt. And I couldn't really do that anymore in banking. It's a sales job, banking is. And I don't know. There was just too much politics in banking. And I really wanted to just work with individuals. Like, I wanted to see people live a little more stress-free. How can I help people enjoy life, by helping them with their money? Because that's where most stress comes from. And it's all money-based, it seems like. So being self-employed, there was more flexibility to kind of do what I do best without being restrained in corporate rules.
Okay, so John Michael, why did you go self-employed?
Maria, do we have 45 minutes for me to talk about that?
No, you need to give us the Reader's Digest version, please.
Just to follow my passion and have control of my vision for the way I wanted to do it. And I created the paradigm of Peridot as the accounting firm to attract those self-employed minded people, to give them the freedom of that self-employed control under the umbrella of Peridot. And that's why I'm so excited to have Camille. How about you, Maury?
Well, much like Camille, I couldn't do the 9 to 5. As most people know me, I'm more like 10 a.m. to midnight. But I also knew that I worked hard on my own, and I'm self-disciplined, and I wanted to build a business that I could be proud of, that had my input, and I just felt like I could do that better on.
Thank you so much, Camille.
No, thanks for having me.
And I think for our listeners, what you've just shared the past 40 odd minutes has been a fantastic bit of advice. It's something that in many ways is simplistic and the rule of thumb in life, but it's great ideas, and we appreciate you sharing that.
Thank you.
So thank everybody, all our listeners, for joining us today. Please be sure to review this episode. And for more information on who we are or this podcast, please visit www.bammit.com. That's BAMM-IT.com. And our next podcast, we're going to introduce you guys to a little concept Maury and I are doing. We're going to call it what are we calling it? The Outcast episode? What are we calling it? I'm forgetting what we're calling these episodes.
He can't even remember what we're calling it, and I can't either.
Yeah, now you're looking at me.
We're creating a random topic here, people.
Yeah, it's the outlier episode. No?
The outlier.
Well, you guys, we're going to come up with what we're going to call them. But anyways, Maury and I do a lot of research going into these episodes, and we thought every now and then we're going to reward ourselves and just do an off topic subject,
That's what you called it.
off topic,
Off topic. Okay.
offshoot, something. But the next topic I am choosing, and it's going to be about coffee.
Oh.
Because John Michael drinks a lot of it.
I do.
I mean, a lot of it.
I do.
I do.
And that's a wrap.
There's no shame in
That's
that.
a wrap. Thank you, guys.
The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional advice and is for entertainment purposes only. The hosts and guests of this podcast may make terrible attempts at being funny, and this podcast does not defend the merits of this humor, nor does it guarantee that the humor will be successful. It is not guaranteed that you will find this as entertaining as the hosts find themselves.